This is your weekend market recap for Saturday, September 24th, 2022. Let's go. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at EXPI Realty, aka the Trading Agent, and this is your weekend market recap for Saturday, September 24th, 2022. Hopefully you survived this week. Lots to talk about. Grab a coffee, get comfortable, and we're going to dive into this together. The markets now are to this point where it's going to get pretty choppy. I mean, I believe the Feds are making, a mountain out of a molehill potentially with the way that they've overreacted to how fast they want to raise rates, the perception of things, and how it all lines up into midterm elections. And just, again, the whole market in itself is not a mechanism which is black and white. It's gray. There's certain things that don't always seem obvious. A lot of things that I would pertain to like probability based that you're going to be wrong about potentially coming up, because this is where I'm going to try to explain to people you got to be careful with what's about to happen here. Unfortunately, sometimes you're going to be wrong. It's just how do you manage wrong and how do you execute right in a market that might be sloppy and choppy for a period of time. One of the first things I want to talk about is, I saw this full-on crash mode, and it talked about retail traders buy to open put premiums and $18 billion worth, which to me, if the retail is doing that, it definitely seems like the market in general is probably over-leveraged short near term, but that doesn't mean things can't get worse. A lot of it is usually headline-driven, as we talked about previously. Expected wave 3 down. I just did not expect it to be so vicious because of the circumstances around the world. This isn't 2008 with the housing crisis imminent because of overbuild and a million other things. And, in my mind, as I've said multiple times, and again, whether I'm right or wrong, it's subject to interpretation. The market in itself is not in a dynamic that has massive crash potential, in my opinion, near term because of the circumstances in place. I just think this is a prolonged bear market. That's what I've always thought. It's just a matter of how the Feds react and when they will pivot. Now, I know they're trying to put the inflation genie back in the bottle. I just figured in front of a midterm election, they might try to be a little what I would describe as careful rather than reckless, which it seems like. And, there's talks of a full point rate hike next FOMC meeting. Now, again, people are like, oh, well, higher rates mean the market has to collapse. That's not true. It's a trading vehicle. You have to think about the markets as a whole. Things get priced in. Things become normalized. Things change, So that's where you have to be cognitively better. And I know for me personally, being distracted with funeral stuff, being out of town, not being able to be in front of my computers and analyze things, this is why we talk about running this like a business. You pull money out when you're winning. You don't grow your account endlessly and then bet bigger. Risk management, number 101. And if you have options accounts, again, I always tell people make them smaller. Try to trade stock. It's easier to have stops, easier to be, what I would say, maintain your solvency with stock versus options. So we'll talk about all that. And again, sorry, not able to post earlier, but just this is what it is. We're back. I'm back. I'm trying to do the best I can. A lot of people who seem to be frustrated with the markets, but that's what the markets do. They're not always easy. When, you have to always assume there's a target on your back, whether you believe it or not, that the market's going to do things that just are not predictable. And that's where sometimes, like Livermore would say, like just sometimes there's just not things to do. It's just better to sit and watch. Bitcoin. A lot of headlines over the week about countries going to be doing transaction in Bitcoin. I would have to say this is pretty stable. I don't know if it's going lower, but the levels, you need to get higher to be bullish. At this point, it's really hard. This is what might happen within the markets potentially, and this is what I thought was going to happen. I didn't think we'd get so far down so quickly, but we might base out for a while as circumstances kind of unwind. Oil, we've talked about this being a short from up here, shorting any pop. I've personally have laid off of it because I'm always a little concerned during hurricane season of something that could be coming. and again, and it's not like I was ever long oil, but I've always said multiple times, the 60 price range is coming back. There's the thing is called demand destruction. You have to understand that when retail went full hide and seek, hide and gain, thinking that oil was going to $200, $250, when they started really pumping the price projections, you had to be very careful. And again, it worked out for some of the people who took the solar shorts. Unfortunately, I did not take part in that yet. We'll talk about everything. Again, I just want to go through the process and start this exactly how I would do it. And literally in my mind, I haven't had a really chance to dig too deep. I just wanted to go through it and you guys see how I think about it. Whether you agree or not, leave a comment. Hit me up in the Discord room. We can, again, it's always subject to interpretation. You can argue all you want that you think this and that and that. You got to be careful. The dollar. If anyone's been watching, I've said this for months, that the straight line move ends the dollar strength. And what does that mean? Is it's like any other bull market. It's any other overbought or oversold market. The final phase of that up move or down move is the straight line move. I've said this endlessly that I thought the dollar would go higher. I just didn't expect it to go so high so quickly. Well, that's what it is. You can't project every trade or every potential perfectly. And looking at the monthly, I talked about we'd probably get tired up here at the 29s. We pulled back. Let me all right, you can see it. Here's the old, it's so crazy how old highs. We got choppy up here. You can see it better on the daily. Now, we got choppy and we held around 29s. Well, gap and go or novice gap. This is where it gets a little interesting because you have to remember the dollar trades a ton after hours, so the gaps can be a little more difficult to project. That is a gap and go or a gap and fail. We'll see the next couple of days because I really think the Feds, I think some of the friends that posted talking about, I think there's 17 Fed governors speaking this week. Are they going to have a unified position on things? I doubt it. And partial of them are going to be partisan in general. I think if you're not careful, Powell is going to be eating dirt. And when I mean eating dirt, they're going to blame this all on him. His handlers, he got slapped around and Biden gave him an extension after Trump because he thought he would do certain things. Well, at this point, it can't be good. Biden, not Biden, but just incumbents in general are going to be really hammering Powell if he doesn't at least slow his roll. We'll see what happens. TLT, we've talked about it getting sloppy and choppy down here. I still think with the oil crashing, I guess 130 to 80 is a pretty significant crash. Natural gas coming down. Be aware though, there is hurricane potential next week, which could pop oil, gas. TLT holding tight. That's my biggest position. Again, I don't necessarily trust stocks, but I do believe, just like you saw in 2008, I try to talk about this pretty regularly. Before the really big wave down in 2008, you had bond buying. Again, when people buy bonds, it's to preserve wealth. Stock market can go crazy. And usually what will happen is bonds will rally. But now we're in these weird times where people are talking about inflation. I don't necessarily see it as much as potentially longer term inflation. Absolutely. Nearer term, it seems very likely that people will go into what I would consider fear mode, and they will obviously jump into bonds. And now again, bond stabilizing could be good for the market too. I always talk about that. Stability in the bond market is what really sometimes can track how the markets are going to freak out. And so when everyone's saying 4% on, I think it was the 2-year or whatever, the inversion and the yield curve, people are freaking out. But if you look at the 20-year, which is TLT, it seems pretty stable here. Now I know it's not what I would say perfectly stable, but it looks, it's compressing. You're getting volume down here. It's getting, think about rubber band, man. It's getting tight down here. We'll see what happens because again, I really think the markets are overshooting the near-term potential of bond prices, meaning them selling and rates going higher. We'll see how that plays out because, again, I personally believe that if the what hits the fan, people are going to be buying bonds because there is demand destruction in oil, in gas, in commodities, in the economy. And that's where preservation of wealth usually goes to what? bonds. Could we be wrong? Absolutely. So again, nothing is certain. Please, nothing is certain. The VIX rather stuck me pretty good here. I leave the next day, kind of chops, zing pow, comes right up. The hardest thing right now with the VIX is based on the action. It does rather seem low and complacent. Where, you would think the VIX would be going higher with the S&P chopping 10 points, or ES 100 points, and the SPY 10 points a day. Right now, I mean, that close on Friday is ominous. And this is one of the things you have to be aware of. I know the Stock Trader's Almanac has some bull and bear next week. The one thing I always try to explain to people is that just remember, if the market is down or up, it doesn't matter, going into the first and last 3 trading days of the month, there's going to be position squaring. Meaning if somebody had huge profits, they're going to take them. And right now, the biggest profits have to be for what? The bears. Right? Bears have been winning the quarter. Let's call it what it is, winning. So that's where I think you're going to see a pop at some point, because there is pretty extreme position hedging, and the market is technically oversold near term. I mean, oscillators, whatever you want to call it. Like, again, this VIX spike could go higher. I'm not saying the market couldn't go lower, but I do anticipate, like if you look at this action, here you go, was in April, in the end of April, it just popped and then came right back real quick. You saw that. I mean, the VIX went from 37 down to 25, 3 days. I don't know if we're done going higher, but I could see it pulling right back down. I still think at some point this gap fills, but maybe I'm wrong. Maybe this is what's so hard about trading is, I have great experience in this. I've been doing this a long time. I'm not always right. And this is where people, if they get frustrated and they're looking for a guru who's just always right, I mean, they look in the mirror. I ask people, look in the mirror and try to think that you can expect, based on the knowledge that we have, to be right all the time. It's just not possible. What is this wild wick? The Vixen, I mean, again, I said this Friday. I thought the tech was actually holding up better, and it was more of a commodity smash if you looked at Friday's action. Tech seemed to be holding up better because I think the TLT was holding up. Deflation, tech likes that. SPY gets right down to range lows and wicks back on high volume. Now you have 1 gap, 2 gap, 3 gap. I mean, this is 4 gaps down. I mean, this is the problem when you get a ton of gap downs, is that that you're getting excessive panic, where if you're in a bear market, bull market, this is where I guess my history and understanding of the markets is, even in a bear market, you don't want blowouts down, because then you can rip right back. You want this like slow grind. And I think you saw it more towards the highs. Yeah, the slow grind down, where just every day, and then you come down, you pop a little bit, and then you slow down. This is what I think is typical until the very end. And the very end is the straight line move. This got pretty, obviously, people freaking out. And now here we are, long wick on a Friday afternoon. I've said this before. I don't see how the Feds are going to want to be wearing egg on their face, the pie on their face, for being the clowns who raised rates so aggressively, and the market tanked in front of the midterm, because someone's going to own it. Like, the news is going to point to somebody. And I just don't think Powell wants to take the sword and lay on it. At this point, now you have references, which references are good. References are always excellent. We've talked about this now. You got to hold this area. I mean, I think the best move, and this is where me projecting out what I think would be the best move for a bear market to get people out of position, unless news comes. Again, this is the hardest thing. You can't predict the news. We know that. We try to anticipate it, but we can't predict it, per se. I still think it makes sense that you bounce here. And as I've always said, like the knee bend, you bounce, then you smash. Because if everybody's bearish right now, what's the potential for more downside? Unless there's a major dramatic event, that's the wild card. I would think you rally back to get people back. You got, again, I say the best moves that naturally happen are when the market's out of position. I don't know what could be positive at this point. I know there could be a lot of negatives, but at this point, I always say, like, when there's a lot of bad news, they try to bring the good news in shortly after. Like, think of FedEx. They guide down and they announce a huge buyback, right? Typically, people are always trying to, on the backside of bad news to give reasons to not completely dump. We'll see what happens. QQQ, yeah, got right back down, long wick. Now people can argue this bullish or bearish. I mean, personally, if you were trapped in some positions like I am, I mean, on strength, you take your money. Now, do you go right back in and short after? It depends. It's really up to you. I personally think at this point, if I can get back to some even on some of my names or smaller losses, I'm going to take a little bit of time off and just watch. Now, that doesn't seem like what the average person would do, but I think we're in this point where, as I've said, October can be smash or it can be rip-roaring positive because you're going into earnings. And the hardest thing about earnings is what? It's typically bullish, right? Like, companies are not going to try to do what? Anything other than cheerlead their own stocks, say things are going to be better, the worst is behind us, we're going to up our buybacks, we're thinking this. Now, maybe earnings is the catalyst for going down. But this is where if I get back to even, when earnings doesn't really start until, let me confirm this real quick while we're just sitting here. I think earnings doesn't start for another 2 weeks. And that's where I personally think if you are looking at the risk reward, near term versus downside, yeah, earnings doesn't really get going, the bank earnings, till Friday, October 14th. So if you are thinking the market's going to tank before earnings, could. Or it could just hold up and chop until earnings. I think that's the hardest thing because it's kind of like the Fed. You know, like we talked about how the market probably wasn't going to do much until the Fed spoke. Well, maybe you need to start getting into the bank earnings, need to start getting into these companies' earnings to really confirm what's next. At this point, tech down here, this is what I'm worried about, over trading this kind of crap. Hopefully this is very obvious, and this is where, you know, you got to understand if earnings is seasonally bullish, we don't know. Way too many wild cards. And so let me get into what I think you need to be doing if you are going to be trading. A lot of people posting stuff on the Discord room. I appreciate you guys. This is how I would think about it. You need to be tactical. You need to be short-term based. Like if you're looking at a trade, maybe you're in for the day, maybe you're out quickly, 2-3 days max. Just knowing the levels, but also being anticipating that the bigger moves to the downside in time. But do we need to suck in some bulls and need to knock some bears out? Because that's how I would think. If I'm the market maker and I'm looking at this chart and I'm going, all right, the best move, and we've talked about sometimes, is the knee bend. You get down to lows, you pop up, you get the bulls going, see, it held, everybody, it's not, and then boom, then you go. It's hard to really wrap your head around. I know, but I've seen that scenario 1,000 times, and it drives people crazy because they're all anticipating the end of the world, and then when the world ends, they got tricked. They're like, well, hold on, I thought it was going to do this, and then it was going to do that, and it's like, yeah, that's not how it worked out, my friend. Like, you had to chop out before you drop out, or chop out before you pop out. Right here, I mean, yeah, we're back in the COVID 2019 levels. Like, check out the monthly here. It's got to hold this back test of this trend line. And one of the things that, if you study 2007, 2008, coming off the highs, here was the IWM, right? Chopping, then kapow. Chopping. I mean, you know the level. If you break this and go back to the day, like it should be obvious that this is bearish. Like, keep this in mind. If the bottoms of the SPY, QQQ, IWM break down, it's probably going to go lower. People are like, oh, you should have been looking at the monthly and all. Guys, friends, I look at this stuff. I just know that repeating patterns, just like this in 2008, like, you get choppy. Remember, the last phase of a bear market is typically a wipeout, but people don't give up that easy, right? Like, it's easy for the market to rise. It's easy for get short squeeze. Like, you know, the long-term trade is not always going to be bearish. Like, I always tell people, like, you kind of have to anticipate your downside being limited from shorting always. Like, you can't be a bear forever, right? The markets will find the bottom at some point. This is where it gets difficult. Again, you got to use your reference points. You got to hold 160s, mid 160s. If it doesn't, I think you near term, I mean, I'm looking at the monthly, looking at the daily. Let me zoom out here. You might be able to see it. Probably somewhere down here in the one, and again, not a ton of downside, 140s to 150s. Like, I don't know if we get straight line, just like a COVID smash here, because unless Russia does something, drops a nuke, I don't think. I personally have said this a lot of times. I think that Russia's going to try to slow roll things in front of the election, and then increase as they get closer, so that the administration looks like they have egg on their face. I apologize for ranting on this stuff so hard, but this is where you got to know, like, the levels, know the bottoms, know the potential of the market with the VIX increasing, but people overly short. It puts you in a position to get, as I said, like the June action, right? We talked about this. Like, this is what I'm worried about. This is what's going to happen, and people are just going to be like all in short, all in long, and you're going to have to be just tactical. And you're going into earnings. We'll see. It gets really hard because earnings, you don't know how the companies are going to react. They might say certain things. This is where the markets, again, I think the only safe thing for me personally is to hold the TLT. But let's talk about gold, because there's times where clearly I'm very good at knowing what's going to happen with pretty high certainty, and gold is one of them. We talked about, if you've been buying this stuff at all, you couldn't. You have to wait for everybody to buy who bought in 2020, 2021, 2022 to be wrong. We talked about. Now you're taking out the lows. What did I say? I wanted to break the trend. The worse things get, the more likely the Feds are going to pivot. Just keep that in mind. But I personally think no matter what happens here, like gold's at the 50-month. Here, I'll show you guys. I said I think this is a big cup and handle, and there's going to be extremes. I think we're closer to the bottom than anything else. The hardest thing that's going to be, the thing that I just need to know people to know for sure. Again, the volumes aren't amazing yet, so I'm not thinking we've capitulated. But when you pick the bottom in gold, this is going to be the hardest thing. If it's a bottom that isn't confirmed by the Fed pivot, then you could go sideways. And if you can go sideways and chop out, it might be better to be late or sell puts or just kind of hang out and not anticipate the big move until the Feds pivot. We don't know what's going to cause the Fed pivot. Like the FedEx news, things are starting to change. They can't ignore this stuff. Good old silver said the same thing. Just leave it alone. Wait, maybe the 15, 16s. Like, wait for the blowout. Does the VIX spike in October? Do we get the first major down move and then the confirmation in the spring? Because, again, the average bear market's 18 months. If you do 18 months from November, it takes you into the spring of 2023. Could we be in for a longer bear market, though, too? That's the thing here. Like, we're coming with CPI getting 9%. The Feds, they might need to put the market in the inflation back in the bottle. We'll see how it plays out. This is where I'm like trying not to be too early on these metals and materials names, because you don't know. You just don't know at this point. We do know shortages long term, but we also know that these guys might literally tank the market out. GDX, just leave it alone. I know we're at the range lows. We are starting to see some volume. Problem is, as I've said this 1,000 times, I don't like to see social media all in the miners at the lows. I want them to be like, this is game over. Because the best times we've showed multiple times, here I'll go back to GDX because it's been around a little longer, is when the Feds do announce the pivot, and oops, pause my language, but this is the kind of action that precedes the wipeout. Did we get down to 16 or whatever that is? I don't know. It's been long-term support, but if it does, you should probably start buying. But this doesn't, to me, look like the wipeout. Like, this is a wipeout, right? Monthly candles that are, as big as your finger, and this is just the tight action. I don't know for sure, but I've warned people, like, you got to wait for the Feds to potentially pivot, and you have to see prices that just go, what? That makes no sense. What? That cheap? That makes no sense. So, if you are, and here's no gap left behind on the GDX, I like this stuff at a certain point. I just don't want to be early, because you could be sitting there. Now, again, if you want to put in your IRAs, you want to put some stuff, that's fine. But I just don't know for a fact that the bottom is going to be some smooth sailing. I'd rather wait for the market, because it seems like the market is like building to this next moment. Because I think now people are starting to wake up that the market's in a bear market. that capitulation phase will come at some point. If you're early to it, I don't think you're going to enjoy that process of waiting for the bottom because you don't know where it's going to be. AG, just leave this stuff alone. I'm going to try to rattle through all this pretty quickly. I mean, I like these names, but they're just going to get slapped around. Newmont, I warn people, leave it alone. Leave it alone, leave it alone. If you go look at the monthly, I've talked about this in 2008. Like, this is what I was talking about, like, the absolute slapdown. Here you go. Made no sense. Gold wasn't imploding, but, I mean, we went from 53 down to 21 in a couple months. Now look at where we're at. I know people are saying, like, well, look at that, Dan. I'm like, but here's the trend line. That was the trend that broke. So that, to me, thinks maybe 30. People are like, are you crazy? Telling y'all they are not friendly to miners. AEM, this one had volume at the lows. Liked it. Much better. Here it goes. Retesting. I don't think I want to be early. I mean, I know a lot of people are like, oh, you missed out on the first solar. And it's like, I just don't like being early because I know how this stuff can play out. It can be insanely frustrating to be early in the miners. Because what could happen is if you have tax loss selling for the year because they're below the starting price of the year, the stuff could go nowhere for months and then capitulate in December as people finally take their tax losses. I've seen that a lot. Y'all know who I'm talking about, like especially friends of the channel have been around. X materials names. I mean, I've said this. They're going to be wide and loose. I mean, X has been for a while. I don't know why you wouldn't get down to the 16 range at some point. Now, you can trade around it. I get it, but I have zero interest in being early. Nucor, man, back down to 105. I still think it gets into the 90s at worst. I mean, they guided down. I mean, we're in a recession. It's just how hard these things get beaten. I personally think materials will do well coming out of this. Just win. CCJ, man, I should have shorted the crap out of this. And I'm happy for the people that did. We talked about it. Because, again, I'm not a uranium bear long term, but I know how CNBC is doing a special on it. And here it comes. Those who took the trade, congratulations. Because 31 down to 24. I mean, it probably, I've said this before, I think it goes down to 16 to 18. Maybe 21. Worst case, like best case scenario for the bulls. They're going to absolutely shred this stuff. I mean, there's nothing safe. I say that all the time. Like, people are like, oh, let me buy materials. No safety. This isn't safety. VALE, it's not the same thing. It's going to play out choppy, sloppy bottom. Arrow, I like this one. Man, I down 76 cents. Perfect. Come on down. 7s, 8s, 6s, 5s. I don't care. Cheaper the better. Some other material names. Mosaic. Nothing safe. Look at that gap down. Ugh. Probably goes lower, but it could chop out for a couple days. All this stuff. Like, put this in your basket. Like, set your alarms for 40. Keep in mind, when the VIX goes nuts, there's no bottom. Like, there's no bottom. When the VIX goes insane, like, you don't know where that bottom's going to be. I always laugh at the SPY bottom with 666. That's crazy to think about. Like, that price when we were looking at it in the 2008, like, nobody would ever think it would get down to there. But that's what happens. When the theater's on fire, there's no thought about safety and helping others. It's like last one out's the rotten egg. Like, that's what they do. They dump this stuff. CF, love it. I think it's coming back into the 60s. Just keep in mind there. Where do I want to go to? Let's go into solar next, because I think this. No, actually, we'll go into solar last. We'll go in that. Let's get into tech, because this is what needs to be reviewed. AMD. People are like, oh, should I buy it? And I'm like, I like it, but there is a gap down here. You can see it. It's come from 166 down to 67. I mean, I hope people watched the video I did in November about the tech wars and how tech was going to get absolutely drug into the dirt and buried at some point, because it always does. Leadership changes. This one's tough. I mean, Doji on Friday. I mean, this is where I was talking about tech actually looking okay. Now people would be like, oh, it's getting smoked. But gap down Doji on a day where the market looked like it was the end of the world. I don't know. Is that strength? I don't know. I smell something there. Smell something off. SMH, same thing. Retested the lows. Doji. Just keep it. Again, if you were long this stuff, there are your stops. If you or if you're looking to trade this stuff, I mean, know the levels. Like 201, probably could bounce back to. Maybe it gets up to fill some of these gaps up here. 216. This is what's hard now. Is like sentiment. Like I went to this wedding, or not wedding. Sorry, the funeral. Not the same. Not even close. This funeral, and I guess it was a funeral for the market as of my DMs. Everybody's getting a little nervous. Like people are asking me, and it's like they're gonna get people to puke. They're gonna get the, and I've said this always. Like you'll know when the market's dead when the people that you don't think that really know what's going on in the market are like, oh man, market's going to zero. I give up. I sold all my stocks. I'm out. And that's like, are we there yet? No. So SMH, Doji here, that doesn't look that bearish near term. Adobe, again, I'm gonna rattle through these quickly. Tight action, right? Like does that look like it's about to open up to the dam? No, that looks like the gap was created and now we're tight action. Again, preface this all. If the market, something happens, Russia drops a nuke, something happens, create all this off the table. Apple, I would think this thing would be in the 140s. Look what it did. Close back, hammer. What we talk about down here in June, it was making, I mean, not maybe here, but like here, I was like, man, this thing was holding up really well, leading the market. Now, is this a double bottom near term to pop? I mean, I guess you just have to use 148 as the low. If it breaks below it, I mean, I'm going to open this up because it seems very obvious. Like, let's just, it's got to hold this 140s 8 area. If not, game over. It's absolute game. Because I've said this. I feel like it's this kind of junk here where it just chops and then rips up on somebody. Chops and rips up at some point. Chops and rips up. Chops and rips up. I think you can get like this W pattern to get people to think it's bullish. Then it comes down. Amazon, absolutely destroyed. It's not anywhere near, though, the June lows, which is interesting. Again, like think about where AMD was and look at Amazon, right? Apple, same thing. These things are not at the range lows. I mean, I guess you could look at this area right here. You can see this is like there's like a little bit of a ceiling floor here. Personally, if it bounces, now maybe the 100-day becomes resistance. It's hard to know for sure. But again, when you look at certain tech in the market, think about the market down here, this stuff up here. It's either about to catch up or it's about to rip and pop again and rip up. CRM, man, looking at this for the first time since Wednesday. Yeah, see, this is where it's lagging. That one, you got to be gone. Guggenheim, yeah, below, you got to be gone, right? But this is the thing, this was so hard is you see this right here and you go, what is that? Okay, that's OPEX Friday volume. You got to watch the levels. You just got to watch them. If it could pop back, it could do this, right? You stretch out and you pop back. It's just not the same kind of candle, potentially. Traders market. I'm going to stress this a lot. You're just going to have to be quicker now. You can play up or you can just wait for down. I personally, like if I take some money off and get any money back on some of my options for that are calls, I'm going to try to just chill out for a minute. Take a few days off. I'll post, but I'm not going to be heavy in it because I just need time to pass. I need to figure out what the next direction is going to be. And I personally think if it's going to be a smash, then it's going to be on news. It's going to be hard to predict. But I'd rather short higher, like pops. I don't chase. I don't want to start shorting down here because that's where I get absolutely smoked. Microsoft, again, you have to stop out down here. But it feels like it's compressing the pop back. We'll see what happens. I mean, just know your levels. I mean, I love to tell you exactly what's going to happen, and that's what people rely on me for, but and this is why I give this information free. Like, you are ultimately becoming the determinant of your own trades. Your education is so how you can manage risk. Because if you want to sue me for being wrong or sue someone else and blame your broker, no. The goal is to become educated enough to manage the trades and how to execute this stuff. It's hard. And that's why sometimes if it's hard, do nothing. MicroStrategy. Here's again, like I thought MicroStrategy, when I pulled up my computer, would be at like 150. 191. Things that don't look terribly bearish. Netflix, you would think this would be back now down near the lows, somewhere in like the 1 set. No, it's holding up, right? Like that wick. I mean, it's trying to looks like compress and go higher short term. I don't know. Roblox. I thought this thing would be down 3 points. Nope. Holding up. Now again, for the week, they definitely have gotten beaten. Seems to be holding up. Tesla. Now this was, all right, red flag to myself should have noticed that when it got up here and it started peeling over, we had weakness coming. It's crazy. I mean, I missed 2 days and it just opens the door. I thought maybe it would have been next week. Now you're back at some support here. You can see all the way going back to April. Watch it. I mean, remember we talked about like Tesla, some of these names that are holding up. If they break down, well, then there you go. Like, I wish I could have pointed this out clearer if I was around. But Wednesday's close didn't really tell me anything. Thursday, clearly that was goodbye, and not a goodbye. Nvidia down 40 cents. I mean, I was watching this thing. I'm like, whoa, decent volume, tight action. Doesn't look like the end of the world. Like I said, I talked about commodities. They look like they were the ones who are getting the hammer time. Yeah, let's get into NDAQ because I usually talk about this. I'm such an idiot. Should have shorted up here. I was hoping there'd be like a double tap. Now you're back down to another primary trend. Again, you can short this stuff, but I would rather wait for a pop. That's just how I feel because I know what happens. I get caught and it comes right back against me. XBI broke the 100-day doji hammer. You can see that there's some support right in here. I'll draw it just to make it a little more obvious. It needs to hold this mid-70s. I don't know. It could go a little lower, it looks like. Tough to say. I mean, this is the thing. Like, if you saw this action and you were bullish, you can't be. Again, when I was busy the last 2 days, I couldn't see this stuff. And I apologize thoroughly. I apologize. I don't have my computers. This is why I look at everything. Like, once you broke this, it was bearish near term. It's so hard sometimes. XLF, financials. Wow, no. Right back at the lows. Interesting. Wick. Man, look at that. Just missed 2 days, and this is what happens. I always tell people, like, when I go out of town, I mean, recently, I feel like when I go out of town, like, crazy stuff happens, and it's, like, not, I personally get mad about it. I feel like it's not fair, but whenever in doubt, go in cash. I'm telling you, man. Like, I cry myself to sleep last night looking at some of the things. I'm like, oh, my God. Like, 2 days. All it was is just 2 days, and you miss it, and boom, kapow. Here you are now, hammer. Again, I feel like it needs to bounce. I could be wrong. Morgan Stanley, not anywhere near the lows. Looking better. I know this gap looks very ominous. We'll see what happens. Financials could be in the world of hurt. Chase, back near the lows. This is what I figured it would look like. Look at that wick. Ugh, someone's buying these banks. Somebody was either short covering or buying them. I personally... Let me look at the 10-minute. I want to see the close on the 10-minute. Yeah, look at the volume into the close. Somebody was buying this stuff. Somebody was absolutely buying this stuff. We'll see what happens. It's so hard. I'm telling you guys, this is so hard. Let's get into oil and some solar. All right, USO. Again, I mean, I guess I can pat myself on the back for telling people to short and shorting it here, but now you gap down below channel. Be aware there's hurricanes next week coming into the Gulf, maybe Florida, I don't know. The market could rally on that stuff. Oil, I've said this before, demand destruction. Everybody hiding out retail-wise, not good. Not good for oil. As it's holding up at the moment, tight action. And the volume, the volume on the USO just doesn't matter to me. I would keep an eye on the levels, right? Like, we're into this next little chop point here. Again, the last move is going to be the straight line move. So if you are bullish, bearish, short, be aware. It just, are we there at that point? I don't know. UNG backing up, right? Talked about it. Probably going to come back down to the 200-day. Look at the support here. Now, again, I hate really charting the UNG because it's a piece of junk ETF. But that would make sense to me. I know people are like, oh, look at the cold and all. I'm like, man, those ETFs are just acting so badly. Please be careful. I personally think, as we've said multiple times, like, there is a demand destruction point. When the Feds decide to pivot, it could get absolutely crazy with commodities, up and down. Because people are going to be like, well, it's still a recession, but now they're pivoting. It's still a recession. The demand is not there. Like, you're going to get mixed signals, and that's where... It's a trader's market. We don't know where the eventual bottom is going to be because this stuff can absolutely get wiped out. I try to warn people. XOP, damn, should have shorted up here on this retest, coming back down. Uh, that gap is huge. Huge. Is this an exhaustion gap near term? That's what the problem sometimes with big gaps is. You think they're the start of the move, but if it's near the lows, then it could be exhaustion. I'm trying to find when the last time we had it. Probably was during COVID. Yeah, here you go. Here was the big gapperoonie. And then it chopped out and went nowhere. That's a big gap, y'all. 8 points. We talked about materials getting wiped out. If you long drip, I mean, I think you got to trade around a core position. I know people are like, oh, I'm just going to hold it indefinitely. It just seems like you're going to come back into this range. From there, I don't know. I love talking about Occidental Petroleum because I know Buffett sold so many calls. You know, we talk about sentiment and retail being like a trigger. Because as I go into solar, same thing. Like everybody's happy and safe. Put call ratio goes to 0.2. Buffett's selling calls so deep. Put that, to sleep. So deep, put that to sleep. ExxonMobil, and then we'll get into solar. 200-day. Yeah, that's a big gap. Is it the start of the move, or is it exhaustion gap near term? It's really hard to know because oil and gas got so many things going on, right? Like you got the Russia stuff, you got winter coming, you got demand destruction. It's just a recipe for volatility, and you're gonna have to trade around it. Or if you have longer term positions, just don't watch them day to day. All right, solar. Hey Tan, if you know Tan, that name, you'll laugh. Coming into the support zone, you can see it down here. You can see it down here. I mean, how big do you want to draw this? I don't know. It doesn't matter. 100-day, I'm really hoping you get this choppy top. Remember I was talking about like choppy bottom before we break down? This is what I was anticipating, my alarms. But right there, I thought we'd get the choppy top and then drop. Well, it was choppy. It's just, again, 2 days change everything, right? Like here it looks like support, then blows out lower. I mean, again, you can short this stuff, but you're going to have to be cognizant that going into the end of the quarter, remember, look at this. Like, where was end of the quarter, August? So in June, we were where? Oh, wow, were we up here? No. It's still holding up pretty well for June. So people might buy it, they might sell. There's just, window dressing. We'll talk about that later in this week. It's, it's only the 26th, if I remember right, coming up. Yeah, you still got a couple days before the first and last 3 days of the month. First solar, this was my favorite to short. Interesting. Could look worse. Why is my alarm not set? I didn't save. All right, well, there's my alarm, 140. I'd love to see it up there. Play this game. It's up against the monthly channel. I know a lot of people think it's got to come down quickly. We'll see. I mean, again, maybe this is the Reading Railroad from Livermore, where it's the last one to go to confirm all the other ones to get beaten to a pulp. ENPH, we told you. Chop top, but it was going to go lower in time. Now here you go. Like it looks like this is stuff that's interesting, right? Like solar is trying to find a base here. It looks very obvious that it should bounce. That bounce, I mean, that might be the best short. Maybe 304. Maybe it like creates this like left shoulder, right shoulder complex. Keep that in mind. Sedge, this thing was acting like poo before. Let me guess. Yeah, it broke the trend. Maybe this, what I would consider like bounce, like does this and it pops back. Solar in general, again, if demand destruction is real in oil and gas, which it is, ask yourself the same question, because I talk to the solar people that come to my door every day. Hey, how's sales going? Oh, they're okay. I'm like, man, you guys must be struggling to sell this stuff because people don't have 30 grand to afford, or at least, extra payment just to slap some tiles on top of the house and try to save $100 on their power bill. Like, it doesn't really make sense, right? Anyway, it is what it is. Just be safe out there. If you have questions, DM me. And again, I apologize if people feel let down. I personally feel let down. I'm going to do another video this weekend and talk about how to have mitigated this better. Because for me, going out of town, like I literally had no time to really check charts. I don't like to overreact, and more likely I should have been in cash. And that's me being honest with myself. being honest with you in the same situation. Like if you're unsure, because again, you know, we all hit our own enter and exits. Like you gotta have the ability to just say, I don't know, I don't know, I don't know. That means I go to cash. That is safe, right? Cash is safe. Like we're always thinking about like solvency in your battle like next turn. Like I've blown out options accounts many times, and the key was always what? I take money out when I'm winning, and then I can fund them back, and I can start very small and build them right back. All it takes is a few W's. You guys know that. So hopefully whoever's, if this resonates with you, if you're in pain, like I'm going to try to talk about this in another video because I feel like I could do it for 20 minutes here and it's not worth it. We'll talk about it. Hopefully you're, I don't know, just stay safe. I'm telling you, when in doubt, go to cash. Like if you're worried about missing out on the smash or the up move or whatever you think is coming, when you don't know and you're at points where your account balances are beyond your point of losing, don't let those grow. Like you can't invest in loser. And it's like the what if. Remember, there's always another trade out there. You got to be thoughtful. There's always another trade. And then when you go to cash, you'll find the next position, the next best trade. That's our goal, is to do that constantly, right? Losses, no one's absolved from losing. Okay? Be safe. Talk to you soon. Love you guys. Peace. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.